What's the difference between cash flow and profit? Confusing these two is the main reason why businesses can look good on paper, but feel stressful in reality. Your accountant says business is looking good, but your lived reality is chaotic and stressful. We're trying to understand why cash flow and profit can both be right, but tell two very different stories. Let's start with profit. Profit is an accounting result. It looks at the income that you've earned and the expenses that you recognized in your business over a specific period of time. What that tells you is, on paper, how much has come into the business versus what has gone out. So it's a very useful figure. But it's important to understand that profit is going to be period-based. It's based on a specific period. It's also based on accounting rules, laws and regulations of the country that you're in and your specific business. And most importantly, your profit is largely going to be very indifferent, or it's not going to account for the differences in timing. In other words, profit doesn't care when your cash moved. It only cares that you've recognized the accounting transaction, your sales or your expense. Now let's look at cash flow. Cash flow is going to look at something completely different. Cash flow is going to be tracking when the money actually moves through your business, when it's coming in and when it's leaving the business. So cash flow is not going to smooth things out. It's not going to average things out. It's not going to adjust for convenience. It just shows you reality as it unfolds. This is why profit and cash flow tell two completely different stories. So you can be profitable in your business, but still short on cash for a number of reasons. Your customers haven't paid, or your customers are constantly paying late. You're paying expenses much earlier than you're receiving money from your clients, or you have money tied up elsewhere in your business. On the flip side, you could have a lot of cash in your business and still be unprofitable because you're receiving your cash from your clients very early, but you're paying your suppliers much later. Or you have a one-off event, a loan, or a big sale. Neither one of these numbers are lying. They're just answering very different questions about the realities of your business. Let's look at one of the biggest dangers that come from confusing these two concepts. Looking at your profit as a proxy for your runway is one of the most dangerous things you can do. What that means is you look at your profit figures at the end of the month or the end of the year, and you calculate in your head quickly, oh, we have this much cash left in our business, so our business can survive 3 months, 6 months, whatever the case is. What you need to understand is profit can look very healthy while your cash flow is struggling. And that's exactly how many businesses will convince themselves that they're doing well, right up until the last second when their business goes under. So your runway is going to be telling you how long your business can operate. And that's what cash flow is going to answer. Your profit doesn't answer that question. So here's a simple concept to help you distinguish between these two. Your profit is going to tell you whether your business worked in that period. Your cash flow is going to tell you whether your business will survive for the next period. Both of these matter, but they're not interchangeable. So separating these two is going to be very important for you to have clear decision making in your business. Once you understand that distinction, many founders are going to ask the question is, why is it that cash flow problems don't show up immediately? They usually show up when it's too late. That's what we're going to tackle in the next video.